Is the great value rotation in the stock market already be over as investors embrace tech again? This is the IG Trading Talk and I'm Manuel Koch. And joining me now are Salah-Eddine Bouhmidi, he's the head of markets at IG, joining us from the Euronext in Amsterdam today. Salah, so good to see you.
Right, good to see you guys.
And Peter Tuchman, the legendary Einstein of Wall Street, joining us from somewhere around New York, right?
Somewhere on an island near heaven.
I love that. Sounds awesome. Peter, let's talk about the value rotation. Investors are staying in the market, but they are rethinking their strategy. And a lot of them are thinking if they maybe should go back to the tech sector. What do you think about that?
You know what? It's really hard to know. I mean, we've only had a couple of days here where you're seeing an inflow into the Nasdaq, and the Nasdaq's been up. The market's basically, and I always think of Salah, is basically trading sideways for a little bit here. It's kind of churning. It's churning and trying to figure out what direction it will take. In technical analysis, there's a trade called the base trade, right? And a base trade is when a market or a stock continues in a horizontal position for an extended period of time, right? And just to relate it to a technical analysis trade, what people tend to do is predict when a stock is going sideways, you know what, I think it's going to go up or I think it's going to go down. And they make a predictive investment according to that. And that tends to be a mistake because that's an opinion, right? Markets, in my opinion, tell us what they think of the situation. Right now, we're sitting in a rotation, no doubt, in a consolidation, no doubt. We're seeing our focus. The market has ADD, attention deficit disorder. It's focusing either on crypto and they're selling it and buying the meme stocks. Are they selling some of the outperformers on the Dow and the S&P and getting into the Nasdaq? I'm not really sure. Are they worried about the inflation trade? Are they worried about the yield curve? I read something yesterday by Arthur Cashin, who is the head of UBS, who's one of the great gurus of the floor of the exchange. He says, we always fight to find the key to the stock market. But sometimes when we find the key, they change the locks. And I think that's what's happening right here now. I think we are in new rules. There's no playbook for what's going on. So I'm not, normally the three of us could sit here and say, yes, maybe we're rotating back into NASDAQ. We saw a little bit of a sell-off in the tech sector a number of weeks ago around the inflation trade. There was some fear. They were outperforming. And they were making this big media play that this was going to go on for a little bit longer. And we talked about it and said, you know what, there's no guarantee. It could be very temporary. It could be just a rotation. It turned out that it was. Apparently, this rotation's actually been going on subterraneanly since November, December of 2020. All that being said, what's going on now in the market is actually fascinating. It's something we need to watch on a daily basis. We obviously have this phenomenon going on in these meme stocks. And I need to mention them not because there's something I focus on, but I'm always, as we always talk about, I'm always continuously a student of the market, right? And my new line of the year is going to be, this is not your grandfather's stock market, right? What's going on now is extraordinary. It should be a learning opportunity for all of us. The volatility, we talked about it last year, the three of us, the three V's, virus, vaccine, volatility. Well, the virus is sort of at bay to a certain extent, at least here in the US. The vaccine is doing what it's doing. Hopefully, the US is now starting to send it around the world, and hopefully one day soon that the world will be vaccinated. Yet the volatility is still there, but it's a function of other pieces of this puzzle. It's a function of where's people's focus is. Where are people putting their money? And it brings us back to your question. Are they putting it in value names? Are they starting to get back into the Amazons, the Facebooks, the tech sector, and the FANG stocks? Or is it just a daily rotation? Because I started to notice it, that the days that the meme stocks started to get, and the meme stock community is growing, and the meme stock a portfolio is growing. It's now Bed Bath & Beyond, Build-A-Bear, BlackBerry, Clover, AMC, GME, and it's roaring, right? I mean, it's roaring kitty, right? As they described one of their guys. And so I noticed that we're seeing, look, crypto is going through its own growing pains, right? Is it a function of what's going on in El Salvador, or is it a function of going on what Elon Musk has to say once he wakes up and has a cup of coffee, or whatever? Or is it the fact that they were able to recoup a lot of money from the ransomware, and they realized that the crypto is not really hiding in the nooks and crannies of the world as we thought it was? Or is it that people are selling crypto to throw their money into these meme stocks? So I find the market fascinating at this time. I think we need to always be a student of what's going on. So I'm not clear where the smart money is going, why it's going there, and what the rotation is.
Salah, you brought us the chart of the week. It's about gold today. And the gold is under pressure, right?
It's like Peter already mentioned, we are in a base, we are in a trading range right now. We see, as we have seen the weeks before, everything was in a bull run, and now we see a small pause even in gold. And the trading range that we see right now is, for me, actually something positive. If we break out at the upper level, we could, combined with the seasonal pattern that actually everybody knows, July, August is one of the best periods for gold. And if we break, we could even see a test of $2,000. And if somebody would participate on that, he could do that with Turbo 24 at IG, with a long, for example, using a call at least below this trading range that we have mentioned before. And otherwise, if you think like Manuel, this is maybe overheated right now, a correction could be coming right now, then at least above 2,000, I would take a short Turbo 24 to secure the upper side, right?
Peter, what are your thoughts on gold?
You know what? Gold is really not my expertise. I find it fascinating to see its relationship to cryptocurrency. Obviously, from our point of view, when we are on the floor of the exchange, we don't trade gold in any particular form except in the ETF, the GLD, and we don't really focus on it. I'm more of an equities guy, but I've found it fascinating to know about the space, the physical gold, and the way it's traded. I find it fascinating to know that it's a hedge, whether it's a hedge against inflation or it's a hedge against the stock market position. People in the past have often used that as a hedge against large long positions in equities. Then cryptocurrency came along, and then everything sort of got thrown into a bit of a flux. So I find it fascinating, the relationship between crypto and gold and the market. And basically, look, you would think with the inflation story that's happening now, right? Services and goods and services are going up in price. We talked about it on our call 2 weeks ago, right? A matter of the supply chain being interrupted, the world coming back online, the demand starting to trickle in, all of those things, the yield curve dropping, whatever's going on here with the inflation story, it seems real. We're seeing that in the US. People are having to pay more to get people to go back to work. People are having to pay way more for construction services, for lumber, for a lot of other commodities, right? And so you would think that gold is a commodity, that it would be on the upswing with the inflation story happening, yet it is not. So Salah is the seasonal pattern guru. And if he says to me that June, July, and August are the more historically positive months for June, then perhaps some people are playing it contrarian and they're getting out of it before they think maybe it's going lower, or maybe this is just a dip before a further rally. I did want to go back to, I sort of got distracted when I talked about the base trade. The funny thing about the base trade, which is where I think we are in the market, is that if you follow technical analysis and a stock or a market or an economy is flatlining for an extended period of time. There are people who tend to get anxious and decide their opinion about whether it's going to higher from here or lower from here, right? There's a trade called a trend trade. That is, the trend is your friend. When a stock is going up, historically it tends to continue to go up until the trend is broken. The funny thing, and then you follow that trend when it retraces down to your moving averages. But the funny thing about a base trade, which takes patience and discipline to do, is because you watch it flatline for a while. And everyone tends to jump in because they have an opinion that it's going to break out on the upside. And then there are those who think it's going to break down on the downside. If you follow technical analysis, you don't have an opinion about where it's going to go. You let the market tell you where it's going to go. Once it's trading sideways, you wait for a green bar, a candlestick. People hopefully know that, we've talked about it before, or a red candlestick, meaning that the market is making its move. And then you hop on that train to leave the station. So you don't have an opinion. You let the market decide which way it's going to go. And I kind of think that's where we are right now. There are a lot of moving parts. There's no playbook for where we are in the economic reopening, with the virus, with the vaccine. You guys in Europe are still on curfew. We here in the States are reopening. People in Brazil, in India, in Japan, in South Africa are getting decimated once again by the virus. What is the world going to look like on the other side of this? What are the markets going to look like on the other side of this? What's going on with the meme story? Where is cryptocurrency going to go? So we need to wait at this point to be a student of the market and to let the market tell us what the next move is. What are we going to be reacting to? And will that be a bullish bet? The market will tell us if it's a green bar soon enough, or a red bar, and it'll be a bearish bet.
Peter, in the second half of this year, there will be a new IPO at the New York Stock Exchange. The company is called Signa Sports, which is mostly owned by the famous Austrian investor René Benko. But it's not like a normal IPO, it's a special purpose acquisition company, a SPAC. What do you think about these kind of IPOs?
So, we've had, it was something nobody knew about just a number of, probably months or years ago, right? They are a recent phenomenon, probably years. They became the flavor of the moment. As we say, markets tend to get their hands on something and then they just beat it to death sometimes, right? They are excited about it. Historically, on the floor of the stock exchange, we are the preeminent market for a classic IPO, where a company is private, it goes public, it does a roadshow, it hires an investment bank, they issue shares, they come down to the floor of the stock exchange, we put on a beautiful event, and the stock opens as an initial public offering. The price discovery process, which we are incredible at on the NYSE, is something that's gone on for years and years and years. And I'm always a firm believer that where a stock opens and how that process happens will determine the future way the stock trades. An IPO, the price discovery, the opening of it on the floor of the stock exchange is like building a building. You don't build a building by putting bricks up here, up here, up here. You build a foundation. You lay groundwork where it has structure and foundation in order to create confidence in the public, right? This is an IPO is when the first public's first initiation to a new company that has been in the past private and is now letting the public price it, letting the investment community determine where they find value. That's historically the way we've been doing it. Then Spotify came around and we became what's called the direct listing. It was another new opportunity and a way to sort of avoid some of the large expenses that go into an IPO and whatnot, and trying to bring it directly to market. We were apprehensive about the direct listing process, but we've been doing it now for a couple of years, and it's proven its viability. It's a little bit strange. I don't need to go into the intricacies of it, but it's proven to be an okay model, and we've supported it on the floor of the New York Stock Exchange. A SPAC, however, is sort of a shell company, right, that usually has some sort of a celebrity or a high-profile person in charge of it. It's a way of raising capital for future acquisitions, right? So it's a shell company that exists as a corporation with the idea that the people who make up the board of directors are then, once it IPOs, you raise some money and then you look forward to making acquisitions of companies that are private, that are out in the private sector, and make them part of this public SPAC. It's kind of fascinating. I know somewhat a lot about it because I trade them very often on the floor of the exchange, but the whole concept to me is fascinating. What we saw happen in 2021 was we have traded over 211 SPACs. 211 SPACs have gone public. Shell companies without yet companies that they've acquired on the floor of the New York Stock Exchange since January 1st, 2021. It's been an absolute frenzy. And in the beginning, it was very exciting. They all list at $10. It's a consistent opening process. $10 is where they are priced, and they either trade up from 10 or down from 10, depending on the excitement, the hype, and who is involved in the company. For a while, they opened at $10, and they kind of marinated and sputtered around at the $10 level. Then when everything sort of got exciting in February and the markets were sort of hot and wild and we were crazy meme and this and that, they became very, very exciting. People were looking. There was an appetite for new things to invest in, and people started focusing on SPACs. That's why so many of them listed, and they became hot. And we saw them not open at $10. They started to open at $10.50, $10.40, and trade between 10.5 and 11. And they were the flavor of the moment. What ended up happening was, which often happens with life and markets and whatever, we overdid it. They issued too many of them. Everybody and their mother was opening a SPAC and starting a company. And they suddenly realized, oh my God, there are not even enough private companies out there that these SPACs are going to be able to acquire, right? That are viable entities. So what have we done? We've built a building that's a shell, but we don't have enough people to occupy that building, to make it for layman's terms. Those buildings are going to lay empty, right? We have SPACs that are just an empty shell, and they have not figured out how to monetize them in a future way. So I hope that that's a good one. We're starting to wind back into a little consolidation in the SPAC space. There were some regulatory issues that went on. They kind of pulled back on the whole. We were literally doing 5, 10 of them a day, right? Period of March, April, May. We were listing 5 and 10 of them a day. That has stopped. We do about 3 or 4 a week now. I hope that the one you're talking about is a positive and a good one. We're sort of circling back to them becoming something viable. There are companies out there for them to purchase, but what makes a SPAC viable is the profitability of the company that they bring into their fold, that they have move into their building, right? You can have a bunch of squatters move in the building, and then the SPAC trades poorly, or you can have an incredible, diamond hand golden deal come into your building, and then you have a positive thing. Let's hope that deal is a good one.
Let's move back to Dow Jones or to the equity markets. We have seen last week new record highs. We are in a positive mood, even if we know from historical moves summer is chilly, is not so much volume. Markets take the time for a breath or for a small correction, of course. But this year there's any hint for that. We could just see new record highs. Everything is running, maybe due to Corona recovery. People are coming out, vaccination is out, everything is positive. But if we look on the patterns that we can see historically, is August is in VIX. The VIX is picking up hugely in August normally, which would say that we could see a correction in the end of summer at least, and maybe we have still some time for that. So what do you think? Or do you think this year there will be no correction, Salah? This is a really extraordinary year. We will pass that.
It's a great question. I'm forever, as the three of us have been really monitoring this market so cautiously and so attentively since March of 2020. We've always been wondering, when will that correction happen? Will it be the economic shutdown of the world? Will it be the coronavirus and 1 million deaths worldwide? Will it be the complete cessation of people's outdoor lives? Will it be no cruise ships, no movie theaters? No. What will it be? Will it be a change of administrations? What will it be that will make this correction happen, right? And I don't think anyone could have predicted that from March 23rd, 2020 low, till August 12th, back to even, and then the next 20 to 30% rally we've seen since then would have happened in the eyes of what's really going on. I mean, let's be clear. We are already in June. I mean, time has lost significance to me, as it is, I think, to all of us. Who would have thought we are now 16 months into this devastating experience to us all, psychologically, emotionally, financially, physically, whatnot, and globally, right? So when will the consolidation, when will the sell-off happen, right? When will that really happen, and what will be the catalyst to it? I don't know if we've seen that catalyst. My fear is that there's something looming around. There, look, we've seen short-term. The inflation story caused a 2-week sell-off in the Nasdaq. Everyone was talking, oh, this is going to be it. Or whether it was the rollout of the vaccine and the obstacles the obstacles that happened along that way. Is it the resurgence of the virus in India and Brazil? Is it the lockdown in Paris and in Germany? Is it the fact that people are still fearful about getting the vaccine, and they're not going to do it? So we'll never have herd immunity. What is it, or is it that people aren't going to go back onto cruise ships and planes and restaurants? What is it that is going to dislocate this rally, which has been a generational rally since March 23rd of 2020? You asked me the question, I don't know the answer. I really don't. I don't know. If you were to ask me and I were to ask people who've been around for 100 years, they would go, of course it's going to happen. Markets never stay at these levels, right? We've seen it happen. But I'm a firm believer that we are in a new rule mode, that there is a new playbook going on, that there's an incredible appetite for investment opportunities in the world, that we are seeing a huge phenomenon of retail investors in the market globally, right? Here in the U.S., plus globally, we've seen 40 million plus people come in through the doors of Robinhood and TD Ameritrade, through their interest in meme stocks, people who this is not your grandfather's stock market. We have millions of people who would never, ever historically be in the stock market, right? All the obstacles to entry are down. So is that enough of a backwind in a volatile market to keep the market going higher? If you take that little piece of the puzzle, plus there's a lot of money on the sidelines still. There's a lot of money invested in the market. A lot of rich people have made a lot of money in the last year. So there's fresh money, there's new money, there are new investors, right? And we have a reopening story. Are those moving parts enough to really support any kind of a sell-off that may happen? It's been clear to us that we've stared disaster and death in the eye for the last 15 months. We have. 1 million people are dead globally. The world came to an end. Stop dead. Yet the market never went down. Now, I would say one thing to you. The Federal Reserve has been the largest gasoline on this fire. Okay, we know that. Buying $120 billion a month. $120 billion a month is being put into the market in numerous different instruments to support the economy and the markets. Now, is there going to be tapering? They tell us that tapering is going to be situationally decided. That if, in fact, we do see consolidation and sell-off, we do see some holes in the tarmac, then they will step in once again and buy more. If we see strength in the economy and the market, then they will start to taper. Is that the moving part that's going to cause this? I don't know the answer to your question.
Guys, I have the feeling there will be a lot of more topics for our next shows. So yeah, we will always have something to discuss, right?
Sure.
Yes. Absolutely.
Guys, thank you so much. I appreciate your time. Salah-Eddine Bouhmidi, the head of markets at IG, and the legendary Einstein of Wall Street, Peter Tuchman. Guys, thank you so much.
Always a pleasure, guys.
Thank you, always.
And thank you for watching. This was the IG Trading Talk for this week. More information on IG.com. Thank you and all the best.